Okay, let's take a look at a bank reconciliation example. Okay, so it says here the Hartman Boat Company's bank statement for the month of November showed a balance per bank of $7,000. The company's cash account in the accounting records had a balance of $56.59 at November the 30th. Instructions: prepare a bank reconciliation for the Hartman Boat Company at November the 30th. Well, I just want you to be able to find out what the true balance is. So I'm going to start this out like so. I'm going to have a side for bank, and then I'm going to have another side over here for book. So bank means bank, book means the business. So let's go back up here. It says that the balance per bank statement was $7,000. And it says that the company's account balance on their books, $5,659. Okay. So then we have items 1 through 7. Let's see here. Cash receipts for November the 30th recorded on the company's books were $6,000, but this amount does not appear in the bank statement. Okay, so it looks like what we have here is a situation where the company has received $6,000. They have recorded it on their books, but they essentially have a deposit in transit. That's not what it says, but they are going to. We're going to assume that they're going to deposit this $6,000. Okay, so we ask ourselves the question: who knows about this $6,000? The bank or the book? And the book side knows it's included in this. They would actually have a negative cash balance without that $6,000. So what we're going to do is we're going to add that over here to the bank side, because when that deposit clears the bank, we'll add $6,000 to the bank side. It's already been included here. Number 2, the bank statement shows a debit memorandum for $40 for check printing charges. So again, recall that with banks, the language is a little bit different. When we have a debit memo, that means that our balance at the bank has gone down. Well, the bank clearly knows about this $40 because they put it on the bank statement. It's the company that doesn't know. So this $40 would be an adjustment to the book side, and it would be a negative adjustment. It's an expense. Check printing charges would be something like office supplies expense. Number 3, it says check number 119 payable to Maris Company was recorded in the cash payments record and cleared the bank for $248. A review of the accounts payable record shows a balance. About a $36 balance in the account of Maris Company, and that the payment to them should have been for $284. Okay, so let me read this again. It says check number 119 payable to Maris Company was recorded in the cash payments record, okay, and cleared the bank for $248. Okay. So they wrote the check for $248, it cleared the bank for $248. A review of the accounts payable record shows a $36 balance in the account of Maris Company, and that the payment to them should have been $284. Okay, so 248 plus 36 is 284. Okay, so I'm going to put a little asterisk by this. As I'm reading this, there's nothing that needs to be done here. They made the payment for $248 and it should have been $284, but they have subtracted only $248 from the cash account. So if you write a check for $248, it clears the bank for $248, and you recorded it as $248, then cash is okay. Now they're going to have to ultimately come back and pay this $36. But the only way this $36 balance could be there would be if they had set the payable up for $284, then they correctly, how should I put this? They correctly debited the payable for an incorrect amount of $248. So I'm not going to do anything with number 3. Number 4 says the total amount of checks still outstanding at November the 30th amounted to $5,800. Okay, so we're going to, we kind of have to make a little bit of an assumption here that all of these, that none of this 5,800 was already outstanding. So these are checks that have been written by the company, and they have not been presented to the bank yet for payment. So when they are, whether this is one check for 5,800 or 2 checks, 20 checks, doesn't matter, that balance in the bank account is going to actually go down by that $5,800. These are checks that the company has written, but they have not circled back around to the bank yet and been deducted from their account. And so that's an adjustment to the bank side because the company knows that they wrote these checks. The bank doesn't know about those checks yet because they haven't hit the bank yet. Let's look at number 5. It says check number 138 was correctly written and paid by the bank for $409. The cash payment record reflects for the recording of check 138 as a decrease to accounts payable and a decrease to cash in bank for $490. Okay, this is a completely different situation than what we saw up in number 3. They wrote the check for the correct amount here, $409, and it cleared the bank for $409. Okay, but when they recorded it for $490. So this is actually going to mess up their accounts payable account as well, but that's not relevant to the bank reconciliation. So what we have to do is we have to say, okay, they recorded it on their books for $490, but the check actually cleared for only $409, which is the correct amount. So we're going to take the difference between those two, which is $81, and we're going to add that to the book side. Number 6, the bank returned a non-sufficient funds check from a customer for $560. Well, the bank knows about it, otherwise they couldn't have returned the check. The company's finding out about it. So this is an adjustment on the book side, negative $560. Number 7, the bank included a credit memo for $2,060, which represents collection of a customer's note by the bank for the company. So the bank knows the company is finding out after the fact. Principal of the note was $2,000 and interest was $60. Interest has not been accrued. So basically what we're saying is this entire $2,060 is going to be a positive adjustment on the book side. So now I'm kind of curious if this has all been done correctly. So we're going to check it out and see. From the bank side, we'll do that one first. We've got 7,000 plus 6,000 minus 5,800. And that comes to $7,200. And then from the book side, we've started off with $56.59 minus $40 for those checks, plus $81 for the error, minus $560 for the insufficient funds check, plus $2,060 for the note collected, and that comes to $7,200, and we match on both sides, so we're good.